Good morning, buddy. Hope everybody's having a great morning. Let everybody file in here. Good morning. Good morning. Good morning. Posted a few things on X this morning already, kind of where we're interacting. So you can check those out. The trip to nowhere. Yeah, right back where we're at. What is interesting, we were discussing this yesterday. We talked about 6,900 and we're not seeing significant speculation above 6,900. So I was live on X in the afternoon with a larger group and actually pre-FOMC kind of discussing the range that we were seeing in the SPX option structure, and we were not seeing much speculation above 6,900. So into the end of the week at least. So you can't predict the future, but I like where our thesis was at and our game plan for yesterday, and then game plan heading into today. So I feel pretty confident of where we're at. We actually almost touched. I think we touched 6,900 yesterday to the penny. So pretty good game plan. So, and then started retreating, and then I'm not really sure what the overnight stuff was, but we're right back to 68.50. So key level. We'll get started in just a minute. Let everybody file in here. All right. Good morning, everybody. We'll go ahead and get started. This is Michael from Game Edge. We're coming to you on Thursday, December 11th with our pre-market prep session. As always, we appreciate the interaction. We continue to see our social media presence grow. So we love that. And our Discord continues to grow. So like on X and YouTube, and like and subscribe and be notified when we go live. So as always with our pre-market prep, if you haven't joined us before, welcome. I'm going to go over our three pillars that we look at Game Edge: sentiment, structure, and trend, and how we mechanically go through that every day to dissect the SPX option structure, as well as individual equities. This is fractal in nature. So what we're doing with the SPX option structure, we do with individual equities also, Mag 7. We do have two mechanical portfolios, and we'll talk about those here in a minute also. So we're looking at our market trend model. This is obviously the trend pillar of our three pillars here at Game Edge that we like to cover. This is based on the tick index. The bolded white line is your cumulative tick, or CT. That's your intraday instantaneous. That's just indicating buying versus selling between market participants. Obviously, if this bolded white line is moving to the upside, there's more buying than selling. And the shorter term, what we call railroad track or moving averages, we put on those for a trend indication. And then we add a time component to it, or a time series. The colored ribbon you see expanding here, and the red above cyan, this is our longer look back period. This is how we position longer term money in the overall market. If the red is above the cyan and moving to the upside in a positive slope, we're putting money to work or capital at risk. Our mechanical portfolios, P-Trans to PGEX, is based on a indication or trigger of the bolded white line being above the colored ribbon. And then that would obviously lead towards the red above cyan, and then a positive slope. So that's our indication for our P-Trans to PGEX. You can check that out at our blog, where we posted significant education on that, or our wheel strategy also. And both of those significantly outperform SPX buy and hold. Right now, in my current P-Trans PGEX portfolio, I think I'm at 23% gain on the year, and it's all mechanical. Your entries are indicated after market hours via our scans, and then you place market on open orders the next day. No stops, close above a key level for our Game Edge proprietary stuff, and we exit the trade. So again, yesterday we saw a breadth indicator up here, new highs versus new lows, significantly outpacing New highs outpacing new lows. So obviously breadth is good in the overall market. And then our filter cumulative tick indicator plus 1,000, minus 1,000. Larger block orders. These are institutions. We saw that moving to the upside at a 45-degree angle. So institutions obviously were putting capital to work yesterday and accumulating stocks. So what we want to see is this continue to the upside. You want to see all of these moving averages stacked in the proper order, and the instantaneous or bolded white line, which is our cumulative tick, continue to the upside with the SPX. All right, let's move on the SPX option structure. We separated the SPXA from the SPXP. The SPXA is the tankers or the cruise ships, larger institutional money, as noted by the monthly expiries here. Heading into December monthly expiry, we are call dominated above and below spot price. So that's just looking at the net delta column here. Transition levels here, those are areas you'd like to stay above for a little bit more bullish, positive gamma outlook. You see 7,000 up there at PGX. That is obviously seems to be the highest speculation area to the upside, where market participants are looking for a price to move. Again, does not have to happen, but that's where a significant amount of speculation is occurring to the upside into the monthly expiry and most likely into the year end. So transition areas here, we'd like to be above those. We tested to the upside 6,900 yesterday and looked to be pulling back. So now we're still within transition. As long as we're above the bottom of transition, from a institutional standpoint, the SPXA will still be in a more bullish, favorable outlook for pullbacks to be entry points and to be supportive type action. All right, let's move on the SPXP. All expiries turned on via our web app. We pushed some new updates for our web app. One is the highlight of the PGEX and INGEX area. We continue to evolve this web app here. Quick takeaway, though, we're call dominated above and below spot price. Again, we talked about if we're in a call dominated positive gamma environment, we'd be looking to buy pullbacks and get involved in the overall market. You see transition area here, 67.95 to the downside, 68, 67, 65, 68.70 to the upside. We want to be above the transition area for a more positive call dominated structure. But if we are within the transition, again, that can be in choppy area, at least from an all expiry standpoint. And you see 69.50 to the upside. That's that PGEX, and then COI at 7,000. Again, those are highest sensitivity speculation areas to the upside that we'd be looking for spot price to head towards, as long as we're above the transition area. All right, let's move on. The SPXP GEX ratio. Again, we cover this. This is like a put call ratio, but we add a time component, which is gamma. So we give a little bit more weighting to the short dated call versus short dated put gamma, that ratio. Again, yesterday we saw SPX move up after post FOMC. We are still seeing a positive slope in the GEX ratio that's indicating that call speculators are in control, but not a significant rise yesterday. So we'll see how this continues to play out. Obviously, we want to see a positive divergence, which means the spot price is rising in SPX, as well as the gamma ratio slope continues to the upside. That would indicate out of the money call speculation is coming into the overall complex, as you saw here. So we'll watch this. If we do see a negative divergence, then that would mean the spot price would be up, but this SPX GEX ratio would be to the downside. That would be indicating that call speculation is leaving the complex. So that would be kind of a cautionary look. But as of now, we're above one. Bulls and call speculators are in control, and it has a slight positive slope to the upside. All right, let's move on to the delta balance. Again, this is just separating the overall option structure from above and below spot price. We call this left-hand plane, which is below spot price. That's indicated by the red dotted line. Right-hand plane is above spot price. This is your out-of-the-money call speculation, as well as in-the-money puts. Left-hand plane is your in-the-money calls below you. Those will continue to be supportive, as well as out-of-the-money puts. So we separate those. We like to see both of these in a positive slope to the upside, or at the very least above zero, indicating bulls are in control. And as of now, we are above zero. We do see that right-hand plane with a little bit of a negative slope. Again, as I said, we were not seeing a significant amount of call speculation above 6,900 heading into today, or heading into the end of the week, even though we do see that PGEX above at 69.50, but we like to see this traversing to the upside. The left-hand plane in the money calls below us, well entrenched. So that's why we continue to see those pullbacks being supportive. And then the delta balance is the aggregate of both of these, and that's pegged at 1 and 1 across the board for further expiries into the monthly. So again, everything looks bullish here, supportive action on any pullbacks. And after this Friday, we actually see the right-hand plane increasing. So that's out of the money speculation starting to come back into the overall complex. So again, everything looks bullish, speculation to the upside. a little bit lower heading into this Friday, but then continues to increase into the monthly OPEX. So we'll watch this for any changes. All right, SPXP net stack command. I posted about this yesterday, kind of the highlights of it and the definition. Again, this is highest sensitivity levels that we look for intraday action. So 67.50 to the downside, that's in the money calls. Those will continue to be supportive. 68.50, those are out of the money puts. Those charm will continue to grow as those puts decay throughout the day. Again, those would be supportive as time ticks on. 69.50 to the upside, out of the money calls, that would be a headwind area if we did get above 6,900. Again, we'd have to cross that 6,900 level. Again, those will continue to be a headwind to the upside. And then you see your gamma. This is basically fuel or your accelerator. If you cross these thresholds of 6,900 to the upside or 68.50 to the downside, and then net Vanna, right-hand plane significantly outpacing the left-hand plane. So if we do see a drop in volatility, as well as out of the money calls come into the overall complex, we'll have a Vanna tailwind for a move to the upside towards 6,900 and then 69.50. All right, let's move on to the SPX 0 DTE. Again, very easy to see with these new updates in our web app 2.0. You see the net delta bars. You can either do bars with numbers, bars without numbers, or strictly numbers, depending on what you like to look at. And then net charm, again, this is indicating obviously that in the money calls below us will continue to be supportive. Out of the money calls above us can provide a small headwind. 69.50 obviously would be the largest headwind. So this basically is just a visual of that net stack command that I just talked about. And then 6,900 overhead, actually not a significant amount of charm at that 6,900 level, even though we have large out of the money calls there. So again, that will not be that large of hurdle to cross if we stay above transition and we see out of the money speculation to the upside via intraday call versus put speculation. So we've drawn the GEX and DEX transition here. Blue box is your DEX transition, gray box GEX transition, and then the opportunistic trading plans if you're within the GEX transition and DEX transition, as well as the orange drunken sailor range. Extremely choppy. If we're above transition, we'd look for a move up towards 6,900. Above 6,900, obviously we'd be looking for 6,950. If we're below the transition area to the bottom of DS, 68.50, we would continue to look for that to be off of that area. If we're below 68.50, we'd be looking for the expected move to the downside at 0.77%. So then you're looking down here at 68.30. We would anticipate that to continue to be supportive as these in the money calls below us, as well as the charm would continue to be supportive also. So that's the game plan for today around the transition levels and around the drunken sailor range. 6,900 will be that hurdle. Above that, we'd look for a swift move to the upside towards 20, 25, and 30, and then on up towards 45 to 50. All right, with that, join us at gameedge.us, a newsletter. Click on that, put in your email. You'll be delivered this on the weekend. Beyond the Bell includes all of our tools, thesis, and how we navigate the SPX option structure. And then check out our free courses, Game Edge Fast Pass. This is all free education options course. We've spent many hours perfecting this. Again, sign up now, put your email in there, and you'll be able to deliver this to your inbox, and you can go through it at your leisure. So with that, we'll look over to the trading view chart. Again, this morning, I've already drawn our transition levels in. We had an interaction with transition this morning. We saw some failure into that overhead area. We call these transition areas, we call these wet sponges. These are not absolutes, as you'll always have price discovery around these transition areas. So even though we have transition at 75, we came right up to 70 and saw some sort of stalling and failure into that overhead area. So we do not have to reach that absolute area. Obviously, we saw that market participants were taking some profit into that overhead area pre-market. So that is a key area overhead. It's a confluence of N-trans, 0 DTE, as well as P-trans, full expiry. So we'll have to get above that 68.75 this morning to cross into the overall 0 DT transition area. And then we'd like to get above P-trans, which is the positive transition area for 0 DT, to be in a more favorable call-dominated environment and structure for a push up towards 6,900. And then ultimately towards the top of drunken sailor range towards 69.20, 69.30. And to the downside, 68.50 is going to continue to be that area. That's a key transition, not necessarily a transition area, but a key area to watch from a psychological standpoint. option structure standpoint, 0 gex is there. So that's historically an area where we go from more call dominated to more put dominated below the 0 gex area. And then obviously the transition areas, if you're below transition, you're in a more negative environment also. And this is definitely a psychological level that we've seen for multiple days across the board, as you can see from a TA standpoint, as well as a psychological level. So again, transition areas overhead, we're under transition. So we're starting the day in a slightly more negative stance, bearish stance, if we cannot get above the transition areas. But all the other tools and structure is indicating that we do have speculation to the upside. As long as we can cross these transition areas, we have the opportunity for price appreciation. And then to the downside, we've discussed those areas also. If we get below 68.50, we'd be looking for the downside towards 68.45, and then below that towards the bottom of the drunken sailor range. So back towards the 0 DTE, we'll go ahead and look over that. And then you can pause your player and look at these levels here as transition important matters, as well as the drunken sailor range, as well as the expected move for the day. So if anybody has any individual tickers they want to cover, I'd be happy to do that, or want to talk about anything else market related as it looks for today, or outlook for today, or how we cover the SPX option structure. We'd be happy to cover those. Good morning, Paul. Thanks for joining us. I know, good morning, JM. Tesla and NVIDIA are always a stock we get people asking for. So Tesla still looks actually very, very bullish, call dominated still. 500 to the upside. I really have not seen that structure change, even on the market pullbacks. You could go back go back a week or 2 weeks. We've covered Tesla pretty much every morning as people joining us want to look at that ticker. So everything looks great for Tesla. Key takeaway is I'd look for the downside COTMP. This is where out of the money puts go in the money. I'd look for that to be supportive. And then 425 above, 425 to 440. We're still in a favorable environment. And to the upside, 460, get across 450, which we're at right now. Transition area that leads you to a more call dominated positive game of structure. Even though we're call dominated here, but across transition is just more favorable for upside movement. And then 460 would be that next area. 470, 480, you see those 10 lot strikes to the upside. And then obviously 500 is PGX, so it's high sensitivity area. And then COI into December month end 460 here, and then I think into next. Thought after the monthly expiry, I think it moved towards 500. Actually, it was 450 there. And then one of these expiries, I think into January, it moved towards 500, but all expiries, obviously 500 looks to be that target to the upside. So Tesla still continues to look good. NVIDIA was the other one everybody wants to know about. So I'll go ahead and turn all expiries on. 185 to the upside, still call dominated speculation to the upside from market participants, and supportive to the downside. Let's look towards year end here. 185 still seems to be that threshold to the upside for speculation and target that is most likely going to be difficult to get over. So we'd like to see the structure continue to advance through December into January and next year. 200 had been or was that PGX COI area to the upside that we've been looking for speculation. So, but NVIDIA still, as you can see, completely call dominated to the downside, supportive in the money calls, should continue to support the overall structure. So, all right, thanks everybody for joining us this morning. If anybody has any other individual tickers, I'll hang around for another minute or two, and we'll go over those. And then I'm not sure if we'll do a market on open this morning streaming as I did yesterday, depending on what our schedule looks like this morning here as we get into the open. But hopefully that helps everybody this morning. Again, like and subscribe on X and YouTube. You'll be notified when we go live, share our content, interact with us, and look for updates throughout the day as we start navigating the SPX option structure after the market on open and the opening time frame there, usually into 10 o'clock. We start getting a better assessment of directionality and where market participants want to go for the day. So thanks everybody for joining us. Make it a great day and manage risk as always. We'll see you. Thanks.